How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for June 19th, 2018. Here's a snapshot of the institution's positions on the majors as well as the US dollar. So let's take a look at gold and see what the institutions have been doing. So this push downwards is something that I've been expecting for quite some time, right? And I said that I wanted price to drop into this weekly area of demand right here, and that if we got a momentum shift on the daily chart, this would be a good time to get in long. Okay, but I also pointed out the fact that this area here is an area where the institutions were closing short positions as opposed to adding long. That's why I want to wait for that momentum shift. Okay, so on the daily chart, something like that. Okay, so we don't have that yet. We have a test of that weekly area, and what do we see as price was dropping down here? We see a massive increase in shorts. So that is not a good sign for longs, right? And as I've been saying on these videos, it's very possible that we see price drop lower into this tested area of monthly demand right here. And I think that's more likely than not going to be the case. If we're going to see a bounce, it's going to be probably from this area here, this weekly area of demand. Okay, but bottom line, look at shorts increasing to an aggressive state. All right, and coloration of the cells bearish. So not a good idea to be taking longs. Even though net positions are in the positive, we know that the coloration of the cells are telling us that there's a bearish sense in the air right now, and we do not want to be going long. Only if momentum shifts on the daily chart would I be going long. But with this, I'm thinking we're going to see this zone get taken out eventually and drop even further. We might get a small move to the upside as a reaction, but I think eventually a deeper move to the downside is going to be what takes place. Okay, let's take a look at oil, and we see that longs have closed out again from 720,000 positions to 694, and that came as price was dropping here on the weekly chart right into that weekly 20 EMA. Now some of the members took a short off of a daily momentum shift supply zone, and it worked great up until that weekly 20 EMA. I warned the members, be careful, we're hitting a weekly 20 EMA, and there's going to be a force to the upside from that trend line or from that moving average. So be careful with those shorts. So many of you closed out and took your profits, which was great. So long exposure jumps up 1 point. Net positions drop a little bit from 595 to positive 580. Overall, the sentiment is very bullish. Shorts are cooled off. Longs remain aggressive. I mean, for there to be any shift to the downside, there's going to have to be a major shift in position. So far, the trend is to the upside. We have a weekly supply imbalance in control. We're reacting to the upside. We need to see momentum start moving to the upside before we can take any long positions. But longs will be the way to go on the chart. Okay, let's go to the US dollar. What do we see with the US dollar? So we have contracts expiring, and when that happens, the institutions have to get out of one contract and into the next contract. And in so doing, they can do one of two things. They can open the exact same amount of contracts that they previously just closed, or they can open up a lesser amount or a bigger amount. So in this last set of data, we can see a lot of moves are taking place. And these moves are very telling, because if you look at the euro and you watch the previous videos that I've posted, you'll see that, you know, with the euro, we've been so overly exposed to the long side that I was saying, you know, a bigger move to the downside, we'd have to see more of those long positions being closed, because I personally haven't seen in the past the institutions be so heavily positioned in one direction and yet drop price in the opposing direction to such an extent that I am expecting the euro to drop. So and on this week's report, we can see that there's been a big shift. Okay, like look at the US dollar. They used to be 30,000 positions short, and then a big, massive drop from 30 to 19, okay? 11,000 positions closed. as price was moving up. 11,000 short positions closed. Now, I've been expecting price to move up, and so, you know, I didn't want that to happen with such a big amount of short positions because it wouldn't be stable. The run to the upside wouldn't be stable. What's more stable is when longs are aggressive and shorts are a lot smaller. So take a look. Net positions positive 18,000. Take a look. We are now exiting the blue neutral phase and we're getting into a little bit more bullish phase, which is great. Only thing is we're falling short of hitting this weekly area of supply, and we could definitely get a move to the downside. And if we do get a move to the downside, I suspect that move to the downside will only be to remove more of those short positions and to aggressively buy more longs at a lower price in preparation for a big move to the upside. So things are playing out as I've been expecting them to play out since back here. It's just taken 1, 2, 3, 4, 5, 6, another 6 weeks. Okay, and it could take another couple more weeks. But I mean, we're not on anybody else's time schedule except for the bankers. The bankers are the ones that decide what the markets do, and we're on their schedule. So all we can do is take a look at the data and see what they're doing, and we can obviously see that they are preparing for a move to the upside. Okay, and we've been expecting that since down here. So things are looking good. I'm wanting to get long the US dollar very badly, but I just can't get in long here because if that drop does happen, I'll be left with holding short positions, and then I'll have to hedge to the downside, and it'll just be too much of a mess. So I'd rather wait for that move or wait for a break higher and then go in long on pullbacks and like that. But I have a very strong feeling we're going to see a drop like that. That's just my feeling, and so we'll see what ends up happening. It doesn't necessarily have to happen since we've received this big drop in short positions. Okay, it doesn't have to happen as much. Back here, I was expecting it to happen because they were so aggressively short. But now with this big drop, not necessarily. But I have a small feeling that is what's going to take place. All right, looking at the Aussie. So Aussie longs are now cooled off. Look at this big increase in shorts from 60,000 to 75,000 as price was dropping here. I've been expecting a move like this. We've been expecting that for quite some time. And take a look, boom! No longer is the sentiment neutral, but now it's very bearish. Take a look, from 57% to 70% exposure to the short side. Take a look at net positions. Negative 15,000 to negative 43,000. Boom! This is beautiful. You know, this is wonderful for a trade to the downside. So we got shorts aggressive, longs cooled off, sentiment is bearish, increase in net positions becoming more aggressive. This is wonderful. I'm waiting for the right setup, and then I'm going to take shorts. I'll be presenting those institutional short trade signals to the members of the community, and then we'll be taking advantage of a move to the downside. But we have to do it at the right time, at the right place, so we can calculate our risk accordingly and make big upside. Let's go to the next one, US CAD. This one's also an interesting one, and this is the reason why, or I should say, this is one of the major reasons that support, or one of the major things that support my belief that we're going to see a drop in the US dollar. Not only is the data suggesting that it's possible, the charts are suggesting that it's possible, and all the other markets are suggesting that it's possible, even the US CAD is suggesting that it's possible. And why is that? Well, we've been getting a move to the upside ever since this test of the weekly demand zone that I've been expecting to see, and we got a break of that trend line as I was expecting. And now we're just about testing this monthly area of supply. And I don't think we're going to test this monthly area of supply without any type of move to the downside. So expecting a move to the downside, it doesn't have to necessarily take place now. We are hitting a monthly area of supply. So when we hit monthly areas, they usually take days, if not weeks, for price to play out accordingly. So it could take some time, but I think this supports a drop in the US dollar and is one of the biggest charts that is supporting that move. Sentiment is neutral. We shouldn't be going long or short at this time. And longs still aggressive, but shorts, big increase in shorts. Why is there an increase in longs and shorts? Well, I think the big increase in longs is because eventually price is going to move up. Big increase in shorts because preparation for a move to the downside. Okay, all the signals are there for me. I'm just waiting to see how it plays out so I can open up my positions on the US dollar. I'll be opening up positions on this one and also on the US Swiss Franc and the Euro. I mean, so many opportunities are brewing right now. It's just a matter of waiting for them to all set up accordingly, and then I will pounce and I'll be into many pairs at the same time. All right, so let's take a look at US Swiss Franc. So this one, longs are aggressive, shorts starting to become aggressive, just like with the US CAD. Interesting. We're testing weekly area of supply for the 1, 2, 3rd time, and now we're getting a push to the downside. We used to be very bullish, now less bullish. That's good, because if we're expecting a move to the downside, we don't want to be piling in long, right? So expecting a move to the downside like this, and then eventually building momentum for a move to the upside. And let's move on to the next one. Euro, here we go. This is what I was talking about. So I want you to pay attention to this. We were so aggressively long. And so I've been expecting price to drop down to here, but why would the banks want price to drop on the monthly chart if they were so aggressively long? They wouldn't want to. They want to get rid of these long positions at good prices before dropping price. Okay, so the new contracts open, and take a look what they did. They dropped longs from 236,000 to 190,000 positions. That's a massive amount. That's a huge drop right there. Okay, that's a huge drop. And shorts, take a look, becoming more aggressive, very quietly, very sneakily becoming aggressive, even though when you look at the calculations, we're still in positive territory with net positions. The coloration of the cells is telling us they're slowly building up a very aggressive short position while decreasing longs. So take a look at the coloration here. Sentiment is more neutral. Why? Because we really shouldn't be trading right now. Okay, weekly is in consolidation. Yes, weekly supply is in control, but look, couldn't even drop past this previous low, and we're getting a push to the upside. This is very weak, and I'm seeing this on many other charts, not just on the euro. And I've been wanting to get in short on this one, but I'm not going to get in short unless I know for a fact the institutions are ready to drop price, because when they are, price is going to drop hard, really hard, and I want to be in that trade, and I want to make my nice returns, and I want it to be easy breezy without any turbulence. Okay, but when I look at price action, it's not clear, and when things are not clear, that means things are not going to be in that direction. So I don't trade. I wait and continue to wait patiently. I don't care how long it takes. A week, 2 weeks, a month, 2 months, 3 months. It doesn't matter to me. I'd rather not make any returns than to lose money trying to get into the markets. So I'll wait patiently until the right time, and then when I attack, I will attack in full force. Okay, and if it's the perfect setup, I'll even risk more than 1% on the trade. Typically, I don't risk more than 1%, but if it's a great setup, I'll risk even more than 1%. And if I'm aiming for 4, 5, 6 to 1, I can make 6 to 12% on one trade. Okay? So, and that's great. That makes up for the months that there wasn't any trading, and I'm happy. So things are slowly setting up, just taking a lot longer to do so than I would want. But just like the US dollar, okay, similar situation, just inverted. I do still think that there's a good possibility that we get a move to the upside. If that doesn't happen, I'm watching on the lower time frame charts those signals that are telling me that the institutions are ready to take things down. Now, this big decrease from 236 to 190, is that enough for the institutions to say we're good, 190,000 positions, we can take things lower? I don't think so. I think it's the first step in the right direction, but I don't think it's clearly signifying that they're ready to take things down. Sentiment's neutral. Charts are not very clear that there's going to be a move down just yet, so I'm not ready to pounce on this chart. Pound US dollar. And what do we see here? Similar action as the euro. and we see longs decreasing from 69,000 to 46,000, and shorts becoming a little bit more aggressive. Once again, not as bullish, becoming neutral. Don't trade, but we get the first signs of what's to come. Negative 19,000 positions, because I'm expecting a bigger drop like this on the pound. But again, just waiting for a clear sign, waiting for the right setups, and then when they happen, I will take full advantage of them. US dollar, Japanese yen, what do we see? Finally, look at this big increase. They close out 55,000 positions and they open up 82,000 positions long. Okay? They close out 60,000 positions short and they open up 46,000 positions short. What ends up happening? Boom! Net positions positive 35,000. I've been expecting a move like this for quite some time. The data just hasn't been really showing us that this is about to unfold until now. But coloration here is still neutral. Makes sense. Trend line still holding down price. I'm not ready to go in long just yet, but I'm loving what I'm seeing here. This is great because it supports exactly what I believe and what I've been believing was going to happen with price since down here. Okay, Kiwi, last one. So been expecting this, and what do we see? Longs, boom, close off. Now they're totally cooled off. Went from a very aggressive position to very cooled off. And what do we see in shorts? Increasing, and coloration here, very red. Okay, went from 44% short to 68% short. Big increase here from positive 7,000 to negative 15,000. So this is supporting a bigger move to the downside as well. But with weekly area of demand and control, we just can't go short. So watching for a bounce, waiting for this area to be taken out, and then we'll look for the right institutional supply zones to take a short position on. Okay, ladies and gentlemen, so that's pretty much about it. Things are looking very good. I'm very excited, trying not to be so excited, but I've been waiting for quite some time for the right setups to present themselves. But I'm starting to see some really good positive feedback with the data and the technicals to say and suggest that some good trade setups will be ready to be taken. Alright, so that's it for this week, and hope you have a good trading week, and we will see you in the markets. Have a good one.